If you're a Canadian senior or planning to retire soon, this week's updates could directly impact how much you receive in CPP and OAS, and when you receive it. The CRA just released official payment increases for both Canada Pension Plan and Old Age Security, and some Canadians could see their deposits arrive earlier than expected. On top of that, the government is quietly testing programs that could automatically enroll more seniors into GIS, provide expanded dental coverage, and potentially offer a new housing supplement. So if you're counting on your benefits or hoping to increase them, stay with me, because by the end of this video, you'll know exactly how much more you're eligible for, how to avoid payment delays, and what upcoming programs you could qualify for automatically. Whether you're already receiving CPP, OAS, or GIS, or you're just preparing for retirement, these new changes from the CRA affect nearly every Canadian senior. And for those struggling with rising food prices, housing costs, or medical bills, even a small increase in benefits can make a real difference. That's why it's critical you understand not just what's changing, but also how to position yourself to receive the maximum payments you're entitled to. We're covering the updated figures, hidden qualifications, the CRA's new direct deposit timeline, and some lesser-known tweaks that can quietly increase your monthly income. So grab a pen. You may want to take notes. First, if you want to make sure your CPP and OAS payments reflect these changes, and that you don't miss out on hundreds in potential benefits, stick with this update until the very end. We'll show you how to check your payment history in real time, and flag any issues before they cost you money. Now here's what's happening with CPP. Starting this week, the CRA has adjusted monthly CPP payments upward. The average CPP payment for new retirees is now $831.92, up from $758.32 earlier in the year. If you're receiving the maximum CPP retirement benefit, your monthly amount is now $1,364.60, a boost of just over $25 compared to the last quarter. Disability recipients under CPP also get a bump, with the new average disability pension rising to $1,138.55 and the maximum at $1,366.78. And if you receive survivor benefits because a spouse or parent passed away, those amounts have seen modest increases as well. While these increases are not massive, they are tied to the Consumer Price Index, which ensures CPP benefits at least keep pace with inflation. It's not perfect, especially given that groceries, gas, rent, and prescriptions are rising faster, but it's designed to protect seniors from falling behind entirely. And every dollar counts, especially now. Now let's turn to old age security. Seniors aged 65 to 74 will now receive up to $713.34 per month, up from $707.68, an increase of about $6. But the real advantage goes to seniors aged 75 and older, who benefit from the permanent 10% boost introduced in 2022. If you're in that age group, your OAS payment just increased to $784.67 per month, up from $775.10. That's about $71 more per month than younger seniors receive, which adds up to over $850 more per year. Why the difference? Older seniors typically face higher out-of-pocket costs for healthcare, mobility, and caregiving. This policy aims to offset some of that burden. While the Guaranteed Income Supplement, GIS, hasn't seen a base rate change this week, the CRA has issued a timely reminder. GIS is income tested. That means your 2024 income determines your July 2025 GIS payment. If your income dropped last year, for example due to retirement, a spouse's death, or a move to long-term care, you might now qualify even if you didn't before. And if your income situation changed and you haven't reported it, you could be missing out on hundreds of dollars per month. It's essential to update your details with Service Canada right away. In fact, if you're part of a couple and your partner has recently entered a long-term care facility or passed away, your household income may now be assessed differently. That could result in a higher GIS payment. These updates are often overlooked, and many seniors simply don't realize they're leaving money on the table. It's not automatic, so be proactive. Here's another behind-the-scenes change. Some CPP, OAS, and GIS payments scheduled for this Friday are being deposited earlier, some as early as Wednesday or Thursday, depending on your bank. This new direct deposit timing affects seniors who bank with certain institutions and could become more common if feedback is positive. If you're not seeing your payment yet, don't panic, but do keep an eye on your account. Also worth noting, the CRA has improved the My Service Canada portal. It's now easier than ever to check your payment amounts, payment dates, and eligibility status. You can also verify if your tax return was processed correctly and ensure you're not missing out on benefits. If you haven't signed up yet, do it today. It's free, secure, and vital for staying informed. Let's clarify eligibility quickly. For CPP, you need to have made at least one valid contribution during your working life. The amount you receive depends on how long you contributed and how much you earned. You can begin collecting CPP at age 60, but the longer you wait, up to age 70, the higher your monthly benefit. It's a trade-off between starting sooner and collecting more later. OAS eligibility, on the other hand, is based on residency. To receive the full benefit, you typically need to have lived in Canada for at least 40 years after age 18. If you haven't met that threshold, you'll receive a partial pension. Also important, if your annual income exceeds $90,997 in 2025, you'll begin to face OAS clawbacks. That's 15 cents on every dollar above the threshold. If you're earning investment income or working part-time, it may be wise to consult a financial advisor or use an online OAS clawback calculator to determine how much benefit you're at risk of losing. Let's talk about the July reassessment. Each year, the CRA reassesses GIS and other income-tested benefits based on your prior year's tax return. If you filed your taxes late or made an error, your benefits might be delayed or incorrectly adjusted. Some seniors see unexpected drops in July simply because their return wasn't processed in time. To avoid surprises, verify your return is fully processed and accurate. Don't wait for a letter. Log in online or call Service Canada. Now, here's what's coming down the pipeline. First, the Canadian dental benefit for seniors is slowly rolling out. If you meet the age and income criteria, you could receive coverage for dental services starting later this year. That means fewer out-of-pocket costs and better health outcomes, especially for low-income seniors who've avoided the dentist due to cost. Second, CRA is piloting a program to automatically enroll qualifying seniors into GIS. Right now, thousands of seniors miss out on GIS simply because they didn't apply. If this pilot is successful, GIS enrollment could become automatic in more provinces. That would streamline the process and help ensure that no one is denied benefits due to paperwork delays. Finally, there's a proposal gaining momentum in Parliament that could introduce a monthly housing supplement for low-income seniors. It hasn't passed yet, but if it does, it could mean additional help for those struggling with rent or housing insecurity. It's something to watch closely. In addition to the updates we've covered, it's important to remember that these programs are designed to provide stability, but they aren't automatic for everyone. Many eligible seniors miss out on benefits simply because they didn't apply, didn't update their records, or assumed they wouldn't qualify. This is especially true for GIS and provincial top-ups, which vary depending on your income and living situation. If you're unsure, take 30 minutes this week to log into your My Service Canada account and check your status. If you're helping a parent or elderly relative, walk them through the steps. It could mean hundreds of dollars more per month. Also, consider how your retirement strategy fits into these government benefits. If you're still working part-time, delaying CPP could increase your future payments significantly. If you're receiving OAS but crossing the clawback threshold, some simple tax planning could save you thousands over a year. Even small decisions like timing RRSP withdrawals or splitting pension income with a spouse can have a big impact. And let's not forget community resources. Many municipalities offer additional benefits, from property tax deferrals to seniors' utility credits and transit discounts. Pairing federal, provincial, and local supports can create a much stronger safety net. The bottom line: being informed is being empowered. Canada's pension system isn't perfect,